Hi guys, welcome back to another podcast. And we have Natasha Champion back again, our first ever guest and our first repeat guest. Natasha is the Business Development Manager for Gauteng North for Ooba. So for those people that don't know you, Tash, please can you introduce yourself?
Hi, Willem. Thanks for having me back. My name, as you said, is Natasha Champion. I've been with Ooba Homeloans for 17 years. We launched in 1999 as mortgagesa.com. So we've recently celebrated 20 years of operation. We pioneered mortgage origination in South Africa, and we remain the biggest bond originator in South Africa. So we rebranded in 2004 to Ooba. It was quite radical at the time. And very recently, we've given ourselves a surname so that we don't get confused with the taxi service. Our primary function out in the market is to ensure that buyers receive the best deal on their home loan, which, as we know, is the primary financial investment and commitment most people will make in their lives. So what we do in terms of securing the best deal for buyers out there is potentially saving them hundreds and thousands of rands over the loan term.
Okay, excellent. So I think that pretty much covers who and what Ooba is. When we are chatting to our buyers, we like to suggest that they go through Ooba as opposed to a bank. Would you like to go over why that is more beneficial for someone who's looking to buy?
So traditionally, people have felt like their own bank knows them better or can provide better service in terms of a personal relationship, specifically when there's a private banker involved. So I think what people need to remember and indeed be aware of is that a private banker is not the person that approves the deal. So generally, your standard private banker will have about 300 clients selling a myriad of different products and aren't home loan specialists. So aside from the bargaining power of a multi-bank submission, the service will be quicker and better going through a home loan specialist who deals directly with the home loans departments at each bank, where the decisions get made and where bonds get approved.
Okay, awesome. And so, sorry, just to clarify regarding pre-qualifications, for someone who is buying a property, what do they get in particular when it comes to a pre-qualification, and what can they use that for?
So there are many benefits to going through the pre-qualification exercise, and I'll touch on a couple. Firstly, you need to understand your credit score. And in order to do that, we'll pull a complete credit report and analyze your repayment behavior. A lot of people are under the impression that a credit score is only adversely affected if there is a judgment or default. But the banks have actually got access to 24 months repayment history. So for each account, they can see exactly how you've been paying off those accounts on a monthly basis. That's going to affect your score. And it's indeed an indication of repayment behavior. So secondly, we need to understand affordability. The banks have got more than one way of calculating affordability. So from our side, we will apply the bank's formulas to your personal information and give as close a number to how the banks would assess that application. You know, and obviously, thirdly, you need to be shopping in the correct price range, whether you're an investor or whether you're self-employed. You know, we apply all the bank's formulas as it relates to different entities, to different types of purchase, and we'll give you a clear idea of what you can qualify for before you fall into in love with a house that might be out of your price range.
Okay, great. And just to pick up on that as well, from an agent perspective, that's actually one of the reasons that we strongly recommend that people get a pre-qualification, because a lot of the time people don't know what their affordability is, what they would qualify for from the bank. So I think just to help with the shopping process, you know, get your pre-qualification, you know the price range you're looking at so that there's no time wasted down the line. And another reason is when we approach sellers with that information, with a buyer who has been pre-qualified, it incentivizes that seller to actually think about, that negotiation process with that particular client, because at the end of the day, they know that that's someone that can afford it and there isn't going to be time wasted, which is, I think, the pet peeve of everyone in the property transaction, is that you can start and then only have it all fall through a month and a half, 2 months later, because, things didn't work out in the affordability space. You can't overemphasize the importance of getting pre-qualified. And yeah, speaking of pre-qualification, there are 9 banks that grant bonds in different aspects. Could we go through those as well, please?
Yes, so I think before we launch into the details of the 9 banks, it's interesting to note that 40% of applications that are declined by one bank are approved by another. So by doing a multi-bank submission, which is the service we offer, you're in effect almost doubling your chances of approval. A lot of people say, but why? My bank knows me so well. So sometimes your bank can know you too well. They've got access to an internal score, which goes back right to the time you opened your account. So say you're in your 40s and as a student, you missed a student loan repayment. That's something that your own bank will have on record. It's not something necessarily that the other banks will have access to. And the other banks might have a different market share appetite for your specific scenario and deal structure. So that obviously amplifies the benefits of using a home loan origination partner. So we deal with the big 4 that everyone will know: Standard Bank, FNB, Nedbank, and Absa. We also work with 2 private banks, Rand Merchant Bank, which is part of the FNB group, and Investec. We work with 2 affordable lending providers, Itala, who focus on bonds over rural properties, predominantly in KZN and the Eastern Cape, and HIP Finance, which is an affordable lender. They operate far and wide. We also work with Sentinel Homeloans, who provide an installment sales solution. So they are exempt from some of the NCA requirements in terms of the deal structure. So what Sentinel is able to do is assist clients with a lower deposit requirement. So where a commercial bank might say, if you're a non-res, we need a 30% deposit, Sentinel could potentially be able to take that up to 95%. So they're bridging the gap between the commercial banks in terms of risk appetite in some areas. So I think we've really got all our bases covered. If there's a deal to be done, based on your personal circumstances, we've got enough banks to find a way to get that done.
Okay, excellent. And then moving on to one of the big questions that we get, especially now having seen so many interest rate cuts already this year, can an interest rate be fixed over the length of the loan term?
Fixed interest rates will be linked to a much shorter term. So you won't be able to fix your interest rates for longer than 2 years at a time. That will mean that no matter what Prime does, your rate will stay the same for the stipulated term. Fixed interest rates are generally approved at Prime Plus. So although it's going to give you a very precise way of budgeting and calculating your expenses, you might be losing out on the benefits of having an interest rate below Prime. And you won't benefit from any interest rate drops. So it's quite a conservative approach. But I think for investors and people with tight budgets where the numbers have to work, it could be something to look at.
Okay, great. And then would you like to go through some of the pros and cons of, fixed versus variable interest rates?
Variable interest rate, you benefit from any interest rate reductions, and generally whatever Prime is, if your score's good on application, you will qualify for a rate concession below Prime. And that can be linked obviously to the term of the bond. So we've been progressively been in a space of interest rates just recently that have incrementally reduced. But for the last good couple of years, for the last 5 years, I'd say, we've been at the bottom end of the interest rate scale. So, as soon as we see single digits, it's a good time, and you can feel those monthly savings every time that the prime interest rate drops. With a fixed interest rate, you're not going to benefit from any interest rate reductions. You are going to be paying prime plus, and you are going to only be able to fix those rates for a specific term, much shorter.
Yeah, I think that pretty much covers everything we needed to chat about today. The purpose really was just to introduce people to Ooba, what Ooba does, what financing is and all of that. And hopefully it can be some useful information for people looking to buy in the near future. Yeah, thanks for your time, Tash.
It's a pleasure. And really, for impartial feedback, encourage all potential purchasers to have a look at us on Hello Peter. We are ranked #1 in financial services. And you can see all our service reviews. I think excellent service is getting harder and harder to come by. And that's really what we strive for. We empower people to own their own homes, and we try and make the process as easy and simple as possible.
Yeah, definitely. I mean, for whatever it's worth, I can vouch for that professionally, having clients that go through you guys, and personally, because I went through you guys as well when I purchased my home. And yeah, I think a lot of the things that we highlighted in terms of the advantages of going that route are true and apply in real life. So definitely something worth considering for any clients looking to buy in the near future.
And thanks, Willem. And just to reinforce that our service is 100% free of charge. Origination in South Africa accounts for 1 in 4 home loans that are approved in this country. So we've managed to negotiate our bank contracts in such a way that we get paid directly by the banks, and there's absolutely no cost to the client and absolutely no effect on the deal that is received in a negative way. But certainly, as we touched on from a negotiation perspective, a better deal all round and free of charge.
Yeah, excellent. Nothing better than a free deal. Thanks again for your time. I'm sure we'll have you back on for a third one. As usual, please let us know if you have any questions, and I'm sure Tash will be glad to come back on if there's anything specific that people want to know. Yeah, until the next podcast. Thanks, guys.